The New York Yankees are worth over $9 billion, the most valuable team in Major League Baseball. So why are they in talks with one of the biggest private equity firms on Wall Street for up to $3 billion? This isn't a team that needs saving. This is something else entirely. Here's what's happening. The Yankees are in advanced talks with Apollo Global Management, a firm that manages over $900 billion in assets, for a financing package worth $2 to $3 billion. It's a mix of debt and equity. Part of the money would refinance existing debt. The other part would be used to buy out some of the team's existing limited partners. Basically, some of the smaller investors who've owned a piece of the Yankees for years would get cashed out. And this deal isn't actually with the baseball team directly. It's with the Yankee Global Enterprises, the parent company that actually owns the Yankees. And that distinction matters because Yankee Global Enterprises owns a lot more than just baseball. They own about 26% of the Yes Network, the regional sports channel that broadcasts the Yankee games. They own 16% of Legends, a hospitality and event company, and they even own 10% of AC Milan, the Italian soccer club, and 10% of New York City FC in MLS. So when Apollo invests in the Yankees, they're really investing in a whole sports and media conglomerate, not just a baseball team. So why does Apollo want this? Because this isn't a one-off. Apollo launched a dedicated sports investing strategy just last year with $5 billion behind it. And Apollo's own CEO said that he believes this space could generate $30 to $50 billion in future deal opportunities. And Apollo isn't alone. CVC Capital Partners already owns a piece of the Miami Dolphins. Ares Management owns a stake in the Chelsea Football Club. And Apollo itself already holds a majority stake in the Atletico de Madrid in Spain. So why sports specifically? Because franchises like the Yankees are incredibly rare and nearly impossible to replace, and historically just keep on going up in value no matter what the broader economy does. To a firm managing hundreds of billions of dollars, that kind of steady, scarce asset is extremely attractive, and even if the returns aren't flashy, they're remarkably dependable. But here's the catch, and it's a big one. Major League Baseball actually caps how much of a team a single private equity fund can own, no more than 15%. And the league completely bans institutional firms from taking majority control of a team outright. So even if Apollo puts up $3 billion, they can't actually run the Yankees. Hal Steinbrenner and his family stay firmly in control. That restriction exists on purpose. Leagues want the capital Wall Street can provide, but they don't want the hedge funds actually calling the shots on a team. That would risk turning decisions about players and strategy into decisions about quarterly returns instead. So what you end up with is a strange structure. Wall Street's money without Wall Street's control. Here's what I think this is really about. Professional sports teams are being treated less like trophies rich people can buy for fun, and more like actual institutional assets, the same category as real estate or infrastructure funds. As leagues slowly loosen the rules around outside investment, expect more deals exactly like this one. The Yankees don't need this money to survive. They're doing this because in 2026, even the richest team in the world can find a good deal by letting some of Wall Street in, but not too far in. This is exactly the kind of story I find fascinating. Not just who owns a team, but how the money behind it actually works. Obviously, this isn't financial advice, just a breakdown of what's happening and why. If you want more stories like this, subscribe and let me know in the comments which team or league you want me to look into next.